What's going on, traders? In this video we're going to take a closer look at inside bars. We're going to talk about what are inside bars, how to trade them correctly, and when to avoid trading them. And at the end of the video I'm going to show you guys why I personally like trading inside bars and how can they save us some money. So what exactly is an inside bar? Well, just like the picture depicts, inside bar is just a bar that its closes of highs and lows are still contained by the previous bar. And that means even for tails, so not just the body, even tails or the wicks are still inside of the previous candle highs and lows. But to be honest with you, inside bars is quite rare phenomenon. You won't really see a lot of inside bars during your trading session, but it is still important to take a closer look how to trade them correctly. Here we are at the chart, and the first inside bar that I just saw right off the get-go is this bearish bar. You guys can see that the highs of the previous bar are marked right here, the lows of the previous bar are marked right here, and the candle is still in the middle of this bar. The bar didn't close higher or lower, it is still contained by the previous bar. Here we have another example of inside bar. This is just tiny little bullish bar. You guys can see the highs and the lows of the previous bar, and the inside bars close still in the middle of that bar. We didn't close higher or below. So this bar, this is what you would call an inside bar. Now, before we dive into talking about inside bars, I really want to emphasize that the market context and market structure is everything. Trading the candlesticks alone, that's not the way to do it. Trying to analyze and identify the current market context and what the market structure is looking like. That is the trading skill that every trader is trying to acquire. So don't just think that learning about candlestick patterns will make you a successful trader. Trying to identify the current and the best context, trying to identify the market structure, that's the way to go. Of course, we as traders, we are looking for good signal bars to confirm our analysis that we are reading the price action well. And if the signal bar is not good, we're not taking the trade. But that doesn't mean we're just looking at the signal bars. Market context is everything, and finding the high probability setup at key entry points is the way to go. There are some traders who don't like trading inside bars, and there are some traders who like trading inside bars, who have strategies how to trade inside bars. But we really don't have the option to avoid trading inside bars, to be honest with you, because we're trying to find the highest probability setups at the key entry points. And just as you see on the chart, the three bars that I marked here, all of these bars are inside bar. This bullish bar right here is inside bar to this previous bearish bar. This bullish bar right here is an inside bar to the previous bearish bar, and this bullish bar right here is an inside bar once again to the previous bearish bar. All of these bars are confirming the trend line. They are in an uptrend. There's a congruent support running here, and it is a second entry long right here. You have a trend line working lower, you have a break and a new low. So identifying the context is everything according to our price action rules, and we cannot really avoid trading inside bars. So in this particular instance, whether we like it or not, we just have to take the trade, even if we are against trading inside bar, because the setup is so good and is such a high probability that it's going to work because it is at the key entry point and all other factors of our strategy played out. We cannot really avoid taking these trades. Now we're going to dive into the part when I'm going to show you guys why are inside bars beneficial and why I really like inside bars. So just like you can see on the chart, we are in an uptrend, bullish uptrend. You guys can see you can find the trend line fairly easily. It fits nicely. We have this new high working out right here. We have a downtrend working lower, we have a break and a new low. So according to price action rules, this downtrend has played out and this correction is over. After this correction is over, we can be safely looking for longs. So the first long entry that could have happened was bouncing off this trend line, but you guys can see we didn't trigger above this bullish bar. So that means the bullish entry didn't trigger yet. We cannot go long yet. And you guys can see the third bar, this is the bar that I marked, is an inside bar of this bearish bar and thus of this bullish bar. And the reason why I like the inside bars, because they allow us to enter a little bit further back and to enter much safely, and we are risking less money. Because with this bullish bar being established, all we have to do is wait for one tick trigger higher above this bar, and we can drop our order in and take the trade. We no longer have to wait. Let me make it a little bit bigger so you guys can see, because this is just by one single tick, and I got more examples prepared for you guys. You guys can see that in this particular instance, we saved one tick of our entry because we only waited for trigger higher above this bar. If we waited for trigger higher above this bar, we already would have been one tick further behind. So this, in this instance, signal bar helped us and saved us one more tick at least. In this instance, the market context is we are in a bearish downtrend. You guys can see the market is making lower highs, lower lows. We got the trend line in play because we want to successfully and then identify the trend. Prices made a low right here. We're working up higher. We have this bullish correction working up higher. Why this is correction? Because we are still in a downtrend, and we have this correction working up higher. We have a break and a few legs to new high. So from this point on, this bullish correction played out, and we can be safely looking for trades to resume the downtrend. And now you guys can see we have a lower high right here. This bearish bar created a lower high of this high right here. This high is lower than this high. So I'm waiting for trigger below this bar so I can go short here. But here, take a look. I have an inside bar here. I actually have a double inside bar right here. The first bar right here is an inside bar. The body and the wicks are still contained by the previous bar highs and lows. So this is an inside bar. So I am waiting for one tick trigger below this bar, and I don't have to wait for one tick trigger below this bar. And it actually happened the better instance. We have this tiny little bar that save us one more tick. Now in this instance, when we have a two inside bars of this bar, of this would be the initial entry that we liked taking our trades on, but we just have to wait for one tick trigger below this bar to take the trade. Whoops, to take the trade. And notice how much ticks you would have saved. You would have saved 3 ticks right here, because this is still the part of the lower high. So our analysis was done on this bar, but we didn't get the trigger below this bar one tick. We didn't get the trigger below this bar one tick. We got the trigger one tick below this bar. So we saved quite some money, because our stop loss, in case the trade would have failed, was much smaller than the previous entry bar right here. And here I've prepared for you some more examples of inside bars. You guys can see we have this downtrend working lower. We have this bullish correction working up higher. We have a break and a new high. This bearish bar is an inside bar of this previous bullish bar. So if we are following our rules, we cannot really avoid taking this trade. This is a very high probability trade, because we're waiting for a break and a new low of this downtrend right here, and this bullish correction played out. So this is the one example of an inside bar. Here we have inside bar. Once again, we have this downtrend working lower. We have a break and we are waiting for a new low. But first we need to let this bullish correction play out. We have a break and a new high, and it is a second entry short of the EMA. And take a look. This bearish bar right here is an inside bar to this bullish bar. And take a look how with us entering here, because if we didn't enter here and we waited for bar to finish lower, to, you know, close below this bullish bar, so it's not an inside bar, we would have been risking much more ticks. The signal bar right here that we entered, the entry bar, allow us to save us few ticks. Just like here, we have uptrend working up higher, we have a break and a new high. This bearish bar is an inside bar to this bullish bar, and notice how we close in the middle of this bullish bar. We don't have to wait for prices to close below this previous bullish bar. So this allows us to save a lot more ticks to enter in the middle, and thus our stop loss is much smaller. And I managed to find one more example where the entering on inside bar is not the way to do it, and this is exactly how not to take the inside bar trade, because as I told you guys, the market context is everything. But here we have an instance, because in the previous examples, every time we entered inside bar, the inside bar was actually, or had a little resemblance to the body in the direction we were taking the trade. So if we were taking the bearish trade, the inside bar had a bearish body, and if we were taking the bullish trade, we were buying the market, the inside bar was bullish. Here we have a bullish uptrend working up higher. We have a new high right here, We have a first entry long, pullback, second entry long. Now, we want to trigger, we want to trigger one tick higher above this bullish bar for our second entry long to trigger, to go long here. But the next bar was inside bar, was this bearish inside bar. If this bearish inside bar looked, for example, like this bullish doji, this would have been a good trade to enter, one tick above this inside bar, and we would have saved few ticks. But since we are in an uptrend, we're looking to buy, and thus we need the signal bars to be bullish. This inside bar is heavily bearish. This is a bearish bar. So entering on this inside bar would not be smart, and this is how not to enter inside bar, how to avoid trading inside bar. In this particular instance, the correct way would be to wait for break above this bar and potentially drop your limit order further back if you don't want to risk a lot of money. But I really couldn't find a lot of examples of this on the chart, and I looked through through a lot of days. So this is very rare. The inside bar is most likely going to be good in our direction. But just to show you guys, that there are some instances where you don't want to take the trade, and it is where the inside bar, when the inside bar is really in the opposite direction that we are taking the trade. But the biggest takeaway from this video, I want you guys to understand that really the market context is everything, and the candlestick patterns, the signal bars, they're just, a little tool that we use to help us, filter the good or bad trade. But you cannot trade on candlesticks alone. You cannot, because it is easy to make a bunch of videos about pin bars, inside bars, outside bars, harami, origami, whatever the Japanese names for this is. But the overall, the core of traders' skill set is learning to identify the market context, is learning to find a key entry point and find the high probability setups. Because you could be taking the pin bars, reversal bars, the inside bars all over the chart, and you would have been losing a lot of money, because that's not the way to do it. So this is just a little tool that traders use to confirm the analysis. But overall, we cannot really avoid trading inside bars. So don't really sweat it too much. Don't really focus that much on inside bars, because when we are at the key entry point, it is a second entry long, or we have a multiple key levels right here. They are running congruently, and the previous correction played out. That's the most important thing.